Hello, my name is Khalil Safa, your local real estate agent. This is my YouTube channel. This is where I'm going to be helping you guys get the best real estate tips and tricks in order for you to find your dream home or get top dollar to sell your home. So for my first video, I want to go over a concept that not many people talk about. And frankly, many people gatekeep this concept. But buying your home when interest rates are higher is smarter than buying your home when the interest rates go down. Before we get into it and I explain it more in depth, I want to just go over why interest rates go up and down. So when we have a high supply of something and very little demand of something, we go into a state of recession. And during this state of recession, the Federal Reserve, what they tend to do is to lower interest rates to encourage people to start buying more. And then on the flip side, when we have very little supply of something and very, very high demand, what happens is we go into a state of inflation. And to help combat this, the Federal Reserve, what they do is they increase the interest rates to prevent people from buying. But from post-COVID, what we've seen is because so many people had such a large influx of money coming into their pockets, we saw that these interest rates weren't really going back down. But now with the new presidential election and the more type of economic sanctions that President Trump will be putting in to office, we see the interest rates start to trend down. Will they go back down to their 2, 3, 4% like they were a couple years ago? Probably not. Will they go back down? Most probably yes. But it is more logical to buy your house now in this market with the very high inflation rates, and there are a couple reasons why. Reason number one, you're going to have less competition in the market. When we see these interest rates go up, we tend to see many buyers steer away from the market. So many people are like, oh no, it's all right, I'll wait another year, I'll wait till the rates go down, I'll wait. So this is a very good opportunity to try getting a house for a lower price. It gives you more negotiation power because there are some people who are very urgent and in dire need to sell their home. Whether that's for, they need extra cash, whether it's for reasons of divorce or foreclosure. These are many, many reasons on why somebody will really need to sell their home. And you can jump on this opportunity to try getting a lower home price and negotiate a better deal for you. Reason number two, the homes will be cheaper. Going back on my first point, because there is not going to be many people wanting to sell their home, there's not going to be much demand. When there isn't much demand and supply of something, what happens is the prices of that object tend to go down. So now you have a mix of two things: less competition, lower home value. So now this is just a perfect opportunity just to go jump on it and buy a cheaper home. That just sounds amazing. Number three, you can always refinance your loan. With majority of mortgages, especially conventional loans, you can almost immediately refinance your loan. So in order for us to really take a complete understanding of this, I want to give you two situations. Situation number one, you bought your home with a lower interest rate and with a higher home price. So you've already reached that plateau and that low point of interest rate, and it's not going to go any lower than that. So now you've kind of shot yourself in the foot. You bought your house at a very, very high price. So now your fixed rate of what you're paying is going to stay that same. And now your variable rate, which is the interest rate, is not very adjustable anymore. So now you're paying more for your home when you could have been paying the opposite. So now let's look at this other situation. The other situation is buying your home with a higher interest rate and a lower price. So now you have a lower fixed rate that you're paying, which is the mortgage, the equity of the home. And now you have a higher variable cost. The reason why it's called a variable is because it can move. So now in a year or two, or maybe 3 years, 4 years, whatever is comfortable for you or whatever the market trends to, you can now take that fixed price and it's going to stay low, and now you can make it even lower by moving your variable cost down. So now you're not shooting yourself in the foot anymore. You're taking advantage of less competition, lower home prices, and the benefit of refinancing your loan whenever it seems fit for you. Reason number 4, this will help you out with your taxes. Mortgage rates, interest rates, the higher they are, the more you can deduct off your taxes. So keeping this in the back of your mind, the higher your payment is, even though you don't want it to be, even if those couple of years when you're waiting for those interest rates to go down, more money will be coming into your pocket. The reason why is because you can deduct these off your income tax. I recommend you speaking to your accountant for more information about that, but we tend to see these type of payments get deducted off. Reason number 5, this helps you build more equity and keep more money in your pocket. Buying a home, regardless of however much you bought it for or the interest rates, helps you protect against raising rent costs or rent costs in general. Rent is, yes, for some people who don't have the right credit score or don't have the right money, is a good option to help save up for money to buy your own home. But renting for your whole life is like throwing money away. Let me give you an example. Say you're renting a home for $3,000 a month. Okay, we're gonna multiply that by 12. That's gonna give us $36,000 a year that you're throwing away, that you're not gonna get any return on. And now let's multiply that by 30, a mortgage term. You're gonna be paying almost $1.1 million in those 30 years. That's gonna get thrown to the garbage. Now, would you rather be pinning a little extra money, maybe a little more than $3,000, maybe $4,000, maybe $3,500, okay? And then over those 30 years, you're gonna get that money back and your home is gonna appreciate most probably more than what you bought it for. So now you're first off getting something that is gonna give you a return on income, a safe investment, and you never know where you're gonna be in those next couple of years and what type of situation you're gonna be in, what type of financial situation and how much money you're gonna be needing. And now you can use that as leverage to help you, kids, grandkids, great-grandkids, So keeping this in mind also helps buyers just think, whether you're looking to buy your first home, your first investment property, or your dream home, I want to assist you in this journey. So please feel free to reach out to me with any questions, concerns, or any real estate questions to begin with. All my links will be in the description. Please subscribe, like, and share, and let's go on this journey together.